traders, welcome to today's Outlier Live, where we cover the biggest news stories of the day and what the AI trading data says about it. And our top story of the day is, if you bought a car in the last 3 years, there's a good chance that you've got some major problems right now. Our second story of the day is, this one stat is showing that inflation is even worse, and everything is getting worse by the day. And lastly, the UAW just launched a surprise attack. Tune in to today's Outlier Live to get all of that and more. Americans are falling behind on auto loan payments at a record pace. So if you bought a car in the last 3 years, we got some major issues on the horizon right now. Hey, if you're just tuning in, my name is Christopher Yule, and we cover the biggest stories of the day and what the AI trading data says about it. And if you're interested in that too, be sure to definitely hit the subscribe button down below and start trading with AI today. Go to ovtlyr.com to see why outliers win. Now, back to the story here. Americans are falling behind on auto loan payments at a record pace. And it goes on to say here, a growing number of Americans are falling behind in their car payments, an ominous sign for the U.S. economy as high auto prices and stubborn inflation strain household budgets. And it makes sense, right? I mean, everything costs more these days, so we have to make a choice. Are we going to pay for our car note, or are we going to pay for our groceries? Are we going to pay for the water bill? Are we going to pay for the light bill? A lot of people are having to make these choices right now. Car repossessions tumbled in the early days of the pandemic as the government set out stimulus checks, but repossessions have progressively ticked higher as sky-high prices for used and new cars are forcing consumers to take out even bigger loans. The percent of auto borrowers who are at least 60 days late rose to 6.11%. That's a big deal. It doesn't sound like much, but that's a big deal. Imagine every $100 you as a bank lend out, every $100 you lend as a bank, you're not going to see 6% of it again. You're not going to see 6 of those $100 ever again. So if you're trying to make money by making loans, and 6% of the loans that you make are just completely going to default and you get nothing back from them, that means your business model has to increase rates even higher to offset the fact that we have all these people who are not able to pay their car notes. So this is just making things even worse, right? The steady rise in delinquencies comes as both high car prices and steep borrowing costs and inflation and student loan payments, right? Used car prices are back on the rise. We saw them going up and boom during the pandemic, come back down. But, the real issue here, we're talking about car prices. Right around this time, my dad purchased a GMC truck, and it was about $42,000, and it was the most loaded out truck you could have got at that time. That same truck today is pushing $80,000. What? Plus, the quality has gone way down. Everything inside these trucks is all plastic and awful. And he could probably make money selling his truck today from where he did, right? Now, the average cost of a new car is about $48,000, and that's near a record high. But I did want to talk about Tesla. I always want to talk about Tesla on this channel. If you take a look at Tesla, right, the average cost of a new car is around $48,000. The average cost of a Tesla Model Y Performance, just like here, I own this car exactly. When you include the tax rebate, is $41,000. This is the most loaded out Model Y you can get. Literally the most loaded out Model Y you can get is $7,000 less than the average cost of a new car. Isn't that crazy? You can get the most baller Model Y that they sell. You can go 0 to 60 in 3.5 seconds. It is literally the future. You never have to stop at a gas pump again. And it's going to be $7,000 less than the average new car price. Yeah, sign me up for that all day, every day. And in fact, let's take a look at what the AI trading data says about Tesla. It actually just got a sell signal on October 24th. So yesterday, Tesla got a sell signal. And so if you are a Tesla shareholder, now may be a time to take off those shares. Or if you're adventurous enough, maybe even go short. Let's see what the internet is saying about this, right? Representative Jim Jordan says Americans are falling behind on auto loan payments at a record pace. They're reaching levels into their savings to afford daily life. Of course, right? Mortgage rates are through the roof, and more people are taking on second jobs or coming out of retirement. This is Joe Biden's America. I hate to say it, but it is the truth. In fact, even my children have noticed that things are crazy. Things are out of control. Prices are crazy. Nothing is what it used to be, and they can see it. They're 8 and 11, and they can even see this isn't right. This toothpaste is half the size as it was the last time we bought it. Or this toilet paper roll is smaller than the last time we bought it. Or this cereal box has less in it than the last time we bought it. Everybody is feeling this hurt. Everybody sees the same thing on the wall. And like I say at the beginning, if you took out an auto loan in the last 3 years where prices were sky high, where dealers were throwing their markups onto it, when interest rates were on their way up, you're probably really feeling the hurt these days. So let me know in the comments down below. Are you feeling the hurt? Is this impacting you? And of course, feel free to smash the like button to let the YouTube algorithm know that you like this kind of content. Inflation is out of control, and things just got even worse because of this one stat. Retail credit card rates are hitting new record highs. And it makes sense because interest rates overall are going up. So of course, credit cards are going to be going up as well. And if you're just tuning in, my name is Christopher Yule, and we talk about the biggest headlines of the day and what the AI trading data says about it. And if you're interested in that too, be sure to definitely hit the subscribe button down below and start trading with AI today. Go to ovtlyr.com to see why outliers win. Now let's look at this article here. Interest rates are continuing to climb just as the holiday shopping season is approaching, making things more costly for shoppers who plan to use store credit cards. At first, I didn't understand what they meant by store credit cards, but the article goes on to say here, 28.93% is well above the national average, which clocks in at 20.71. So I'm like, wait, how is it 28 versus 20? I don't understand. So we're talking about store credit cards, right? We're talking about when you walk into Dillard's or when you walk into Best Buy or when you walk into any number. I think Old Navy has one where you walk in and they're like, hey, you want to save 20% on your purchase today? Open a store credit card, right? Yeah, that's maybe not such a great idea because these store credit cards in particular are hitting 33% in some cases at Academy, Burlington Coat Factory, Sam Goodies, and Michaels, right? And I mean, this article goes on to say, if you ever carry a balance, a retail credit card is probably not the best place to do so because you're going to be paying exceptionally high interest rates. This article keeps going on. That's a common sign-up bonus among store cards. Hey, save 10% by buying this with the opening a new card today. I'll tell you, I did use this one time, and it was buying my refrigerator, which was $2,500, and the refrigerator, the salesperson was like, hey, you want to open a Lowe's credit card today and save 10% and make no payments for 12 months and get free delivery? And I'm like, okay. So I saved $250 and I got free delivery. I mean, I paid it off, real quick, but I didn't have to. I could have gone an entire year without paying anything. And I mean, that's actually a decent way to use store credit cards. But now it's not doing anything. It's just sitting there collecting dust. People tend to get in credit card debt for very practical reasons, which, when you think credit card debt, you don't always think that people are getting into it because of circumstances. You think that maybe they're getting into it because they're just being reckless, right? They're just excess spending. I actually know family members who are spending themselves well beyond they should be. And so credit cards are how they do it, right? But it's not always the case, right? It's usually something with an emergency, a medical bill, home repair, car repair, or just the fact that day-to-day living expenses are outpacing their paychecks. And that's been especially common the last few years due to high inflation. So if you are looking to take advantage of this, maybe look at Capital One in the AI trading data here, COF. Capital One actually just got a sell signal. What's in your wallet? Well, Capital One may be on October 24th, but it may not be in your portfolio with that sell signal. That was just yesterday. And these signal returns have generated 41.47%. So if you want to get your hands on these AI trading signals and be one of the first people to know before anybody else out there, head to ovtlyr.com to see why outliers win. Now, let's look at this, right? The Kobolevsky letter says the credit card delinquency rates continue to rise sharply. The delinquency rate on credit cards is now at 9%. So that means of the $100 that everybody takes out for people who have credit cards, I should say. For those who have a credit card, $9 out of every 100 is now delinquent, right? That's really hurting companies like Capital One, who make these credit cards, right? That's really hurting other places who are issuing these credit cards, right? They now have to charge even higher interest rates to make up for the fact that these delinquencies are happening. Delinquency rates have more than doubled from their lows when Fed started raising rates. Yeah, we've got some huge problems out there. And this happens at the same time when the bank's balance sheets are all-time highs, right? The bank's balance sheets are all-time highs because people are putting on even more and more loans. Let's see what happens when unemployment actually takes a hit when we're at 3.7 and 3.8. So yeah, a lot's going on right now with credit cards, and it certainly is not going anywhere good anytime soon. I hate to be the bearer of bad news. I feel like everything we talk about is bad news. But I think things are going to get worse before they get better. So let me know in the comments down below. What do you think? Do you think things are going to get worse before they get better? It would really help out a lot of people if you could put your comments down in the comments section down below. UAW just launched a surprise attack! Or at least that was what the article said here, and I thought that was pretty funny, the way that they structured that. The UAW expands strike against Stellantis and targets their largest plant. Let's see, the UAW delivered a surprise attack on Monday, shutting down Stellantis's, the page just refreshed, Stellantis's largest plant. Right, UAW announced it's shutting down the Sterling Heights plant, meaning 6,800 union workers are now off the job and on the picket lines. Right, so these workers, they were doing what they could to keep the assembly lines running, but then the UAW stepped in and said, no, get off the line, get on the picket line, and we need more money. Despite having the highest revenue, the highest profits, and the highest profit margins, and the most cash in reserve, Stellantis lags behind both Ford and General Motors addressing the demands of the UAW workers. And that's what the union said. We're outraged. Oh, so the Stellantis executives were saying this. We are outraged that the UAW has chosen to expand its strike against Stellantis. The company said in a statement, blah, blah, blah. Last Thursday morning, Stellantis presented a new improved offer to the UAW, including a 23% wage increase, which is huge already. Nearly a 50% increase in contributions to retirement savings, and additional job security protections. Following multiple conversations that appeared to be productive, we left the bargaining table expecting a counter proposal, and we've been waiting for one ever since. Man, I'll tell you what, these UAW workers, if a 23% increase and a 50% increase to your retirement contributions doesn't get it, what is it going to take? What do you actually need, like the CEO's salary at this point? Are you waiting to get $7 million a year each? It's not going to happen. I'm looking at these numbers and I'm thinking, that's huge. What a giant win for them. But apparently, the UAW is hoping for even more. And I don't know how much more Stellantis, Ford, or GM could even do that. At this point, I think they're going to outsource themselves out of a job if they continue to push so hard against the people who want to give them a paycheck, who want to give them a 23% raise, who want to boost their retirement by 50%. And they still are striking against them. Stellantis added the UAW's continuing strategy of wounding all three automakers will have long-lasting consequences. And the addition of Sterling Heights plant brings the number of UAW workers to more than 40,000 of the 150,000 across the nation. And I can't remember if I did this already, so I'm going to go ahead and do it again. If you're just tuning in, my name is Christopher Yule, and we cover the biggest headlines of the day and what the AI trading data says about it. And if you're interested in that too, be sure to definitely hit the subscribe button down below. And start trading with AI today. Go to ovtlyr.com to see what outliers win. Now, let's take a look at what the outlier trading data says about this Stellantis. STLA. So this is not Tesla, it is Stellantis. I actually didn't realize that STLA and TSLA were so similar. Stellantis signal returns here were 131%. That's pretty outstanding. But we did get a sell signal back here on September 27th. So the AI trading data is basically saying that Stellantis is going to be taking huge hits, and it's going to continue to take huge hits, especially even if they got back to work. Do you realize just how much more expensive your cars are about to get because of these demands? Right? They're offering a 23% increase in salary, a 50% increase to your retirement savings, and that's not good enough. give me a break here. But if you want to be one of the first people to get these signals, head to ovtlyr.com to see why outliers win. Let's go see what the internet's saying about this, right? How far are they going to push it? Seriously. Now listen, I'm not involved in the UAW, but looking at this from an outside perspective, I think they are really, really setting themselves up for trouble. I'm old enough to remember the UAW strikes in the 70s. Guess what won? Massive imports from Japan. I wonder where the new cars are going to be coming from now. India? That's my perspective right there. If you're going to price yourselves of labor, if you're going to price your working labor out of the market, Stellantis, Ford, and GM, they're going to try to continue to make their products. It just may be without you. It may be with more robots. It may be outsourcing it. It may be sending every single bit of these cars to Mexico, because I know they use a lot of Mexican labor and Mexican parts right now, and they just may send the entire thing to Mexico. Is that what you really want? Seems like that may be the case if the UAW cannot figure out how to make some concessions and make some deals and get back to work. Now listen, I have no idea how the YouTube algorithm works, but it says that you're going to love one of these two videos. Thank you for tuning into today's Outlier Live. We'll see you on the next episode.